I also wanted your thoughts on Ashok Leyland, post its numbers. And of course, we have some management changes as well. So we're going to talk about that. But, just listening to the conversation, we have the management joining us. Ashok Leyland is the first company we're looking at this morning. Revenues were in line with estimates, but the margins came in at a beat. They were up 310 basis points year on year. And Ashok Leyland now has a new CFO, Mr. K.M. Balaji, who's the current deputy CFO of the company, will assume the role of CFO. And the current CFO, Mr. Gopal Mahadevan, who has been at the helm for very long, will now be elevated to a new role. So to talk more about this, we have Shenu Agarwal, the Managing Director and Chief Executive Officer, and Gopal Mahadevan, the whole-time Director and Chief Financial Officer at Ashok Leyland. Mr. Mahadevan, first, good morning to you, and Mr. Agarwal, good morning to you as well. Mr. Mahadevan, I'd like to ask you about this change of role. You will now no longer be the CFO of Ashok Leyland. You have gotten elevated to a new role. Can you elaborate what is the nature of this role and what's the rationale behind this change?
Thank you for that question. I just wanted to share 2-3 points with you. There is a change of role. I continue to be on the board as Executive Director. My role would be focusing more on strategic financing and M&A, because I think that these are very important things that the company is now looking at to transform itself into a global top 10. So, which is why I'm transitioning into that role, and that's why we have a new CFO in place.
Well, Mr. Mahadevan, let's come across to you. Since your role will be more strategic, finance and M&A, what is the focus, say, over the next 2 to 3 years in M&A in particular? What areas would you be looking at?
I think, this role is going to be, more, as I mentioned to you, on strategic financing, M&A, and I would also have, to be involved a little more on the subsidiaries itself. Ashok Leyland has a lot of subsidiaries which are today, on value generation mode. So this is another part of my role where I would be interfacing with the management of these companies to look at opportunities for value enrichment. At the moment, it's a little too early for me to state what the specific M&As would be. As and when they happen, you will certainly come to know of them.
All right. Gentlemen, good morning. Mr. Agarwal, the fourth quarter, let's get to some of these numbers now. So fourth quarter saw degrowth in top line. Revenues were down about 3% or so. Do you see, this kind of continuing into FY25? What kind of sort of growth are you expecting for this financial year?
Yeah, thank you for that question. Let me just put FY24 in the right perspective, because a lot of people think that it has been a tough year. I think it is mostly because of the recency effect of the last quarter of FY24. But if you look at FY24 and you divide it into 2 parts, the first part being the first 8 or 9 months of the year, you will see that the MHCV industry was really growing at a very healthy pace. I think the growth rate was roughly around 8 to 9% in the first 7 or 8 months. Yeah, but if you look at the last 4 months or so, you will see that some degrowth had happened, right? And therefore, some combination of that was that for the whole year, the number looked very small. The number was still 4% growth in MHCV, but it was smaller. Yeah, but if you look at this situation in the right perspective, then we will understand that the reason the market degrew from, let us say, November, December until March was because of a very high base effect, which was a one-time effect of this OBD2 regulation that had come in last year, in the previous year. Yeah, because of that, there was a lot of pre-buying that had happened in FY23, and that is why FY24, last 3 or 4 months, did not do very well because of the high base effect. Now, but if you exclude that 3-4 month period, you will see that April, October, the industry was growing very well. And even in April this year, now in FY25, the industry has grown by 10%. So, based on that, we do believe that FY24 actually was an excellent year. And we also think that that momentum will now carry forward to FY25 also. Before the year started, a lot of research agencies had forecasted that H1 might be a very bad time or a time of degrowth. Some people were even saying H1 might degrow by about 15% in MHCV space. But now April, which has grown by 10% in MHCV industry, has proven all that wrong. A lot of people had a lot of anxiety about the elections also, that elections might have a negative effect. And so far, we have not seen that. April was good. Even in May, we are seeing very positive momentum on the ground, right? So we are maintaining a lot of optimism about FY25, not just for the whole year, but even for H1.
Okay, so you're saying that the CV growth momentum will carry forward into FY25 and you're maintaining optimism. Mr. Agarwal, what does this translate into in terms of growth? Are we looking at a 10% growth? Can you get back to high teens growth in FY25? And MHCVs particularly, you spoke about how in the last 4 months of FY24, there was some degrowth. But what is the growth rate that we're looking at now in FY25?
So, see, for MHCV, I mean, it's too early in the year to give you a number for the whole year. But what we will like to say is we are optimistic. We think that the industry, against the earlier original projection of many people in the industry, that industry might degrow by 4, 5, 6, 7%. We think that is not going to be the case. We think even in worse situations, industry might be flattish, but we are very optimistic or hopeful that industry should actually display some kind of a growth in FY25.
All right, let's focus on the margins then, Mr. Mahadevan. The operational performance has been strong. Margins went up by around 300 basis points or to around 14%. The question is there scope for further improvement from here on?
I'll break it into two parts. There are external factors and internal factors. And I think Shenu talked about the external factor where April has been a 10% growth. May seems to be, on very firm ground, terra firma. So it looks like, there is going to be a reset of the earlier expectation that the market can degrow. So possibly there is growth there. Second one is on the external factor. We must remember that India is the highest performing economy in the world today. And it is investment-led growth that is posting this GDP of 7.5% that is happening. So that's going to be extremely positive to the MHCV. The third bit of it is this huge demand that is happening on buses. If you look at it, we are, by the way, India's #1 bus manufacturer today. We have reinstated that position, reclaimed that position, and done it very smartly with a market share of nearly 39% last year in FY24. Now, with all of this, the other bit that is happening is price realizations in the industry are getting better. All players in the market are double-digit EBITDA margin, which is very, very good for the industry. And I think they've gotten used to the fact that, we need to push up margins in an industry where there is demand. On the internal side, which is more core to Ashok Leyland, what we are doing is, despite any, despite, I would say, any favorable conditions that are happening on, steel and other raw material prices, we would want to create our own capability to ensure that we are at a much higher level of EBITDA. So there has been the teams, manufacturing, product development, quality, a whole host of cross-functional teams have been working to take out cost of the product, even as we have produced, supplying superior products to customers. That journey will continue. This has been happening over the last few years, but has gained tremendous pace in FY23 and FY24, and that would also continue. So to answer your question, we had mentioned early part of last year, and this is not a forward-looking statement, this is more a direction that we have set ourselves for. We would want Ashok Leyland to be in the mid-teens EBITDA margin, and we are pursuing that journey very, very relentlessly.
All right, the goal remains mid-teens margins, and you're pursuing that relentlessly. Mr. Agarwal, if the goal is that, will it how much more can you squeeze out of, as you said, optimizing costs more? Do you think the bulk of that advantage is already behind?
Cost, cost optimization never goes off the radar and should never go off, all the time you're launching new products, all the time you are bringing new technology. And all the time, I think there is always a scope to optimize products. So I think, but on the cost optimization, we are specifically very happy with the way the teams have delivered this, especially in the last 2 years. We still think that there is a lot of opportunity left. I think at least for FY25, we are taking a very ambitious target on cost optimization as well. So I don't think it is a journey that stops. It is something that will continue.
Okay, finally, Mr. Mahadevan, what is the plan with Leyland's EV adoption pipeline? I'm asking because, globally there's a bit of slowdown, at least in the passenger vehicle end of things with EV adoption. Are we seeing the same in commercial vehicles as well?
I think, let me put it this way. I think EV is set to grow because people are getting used to it. People want clean energy. ESG is becoming a very important piece of business and everyday life. I think people are becoming extremely conscious at the individual level and at the corporate level. So at the community level and at the government level, the impetus is even higher. So we are possibly one of the few countries in the world where there are multiple layers of promoting alternative clean energy. So there are schemes for that, for two-wheelers, three-wheelers, four-wheelers, trucks and buses. So I think, and there is a stated policy of the government that they would want to promote usage of EVs, especially in cities. This is one part. The second one is the government itself is pushing for scrappage of old vehicles, which is again going to be kind of auguring well for the industry. But at the same time, let me tell you that the core diesel business is not going away anywhere any fast, right? It's going to be there for, quite a few years, if not decades. And I think there is a transition that will happen between diesel and alternate energy. And Ashok Leyland is priming itself. It is ensuring that it is riding both the horses very, very efficiently and leadingly.
Okay, Mr. Mahadevan, all the best and thank you so much for joining us and speaking to CNBC-TV18. Mr. Agarwal, thank you as well. So that is Ashok Leyland talking about how they believe that FY24 was an excellent year for the commercial vehicle sector and that growth momentum will be carried into FY25.